Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week of 19th of August. And I think this week has been a lot difficult to trade, has been super choppy, quite volatile, low liquidity, and everyone was waiting for Friday. So throughout all the week, we've been suffering these ups and downs in the Nasdaq and in the S&Ps. And we got a little bit of good days, like, for example, the non-farm payrolls annual revision. But then on Thursday, we got the PMI flash with a lot of issues. And Chair Powell's speech on Friday. We are going to analyze everything. The statements from Powell, the status of the market, technical analysis, the forecast, the key levels, the interest rate previsions, everything. So let's start with the economic data, because on Wednesday, as I was saying, we got the non-farm payrolls annual revision to the downside, quite aggressive. Minus 800,000 was quite aggressive. And the FOMC minutes also showed signs of that some of the Fed think that there might be a reason, there might be time, it is time to think about how to adjust policy. So that was the first sign, the FOMC minutes, and these non-farm payrolls to the downside, doing signifying that the labor market it's not as strong as everyone's would like. But then on Thursday we got, I think, the biggest data of the week in terms of economic data. We got the services higher, we got the composite higher, but the manufacturing and the details in the report showed that the manufacturing part and employment are still quite weak. 48 below 50. We were expecting a little bit more near 50. 48 is quite weak and is in contraction territory. That coupled with the fact that the revision to the downside on the NFP, and also on Friday, Fed Chair Powell speech, which we are going to cover right now. These are the most key important statements from Powell's on the Jackson Hole Symposium speech. And basically, this is where I think it's key to understand. Policy adjustments are going to happen. And basically, let me just take the laser. So the policy has come to adjust. The time has come for policy to adjust. It's going to change, not to the upside, but to the downside. Why? Because they don't want nor welcome any further cooling in labor market conditions. They are worried about the labor market. Obviously, they think that it's no longer overheated. Inflation is on a sustainable path back to 2%, but their dual mandate is inflation and labor market stability. So inflation has declined significantly. That's good. But they are now thinking about the upside risks for inflation have diminished. Now the downside risk is employment. So this is a change in mentality due to the data, and this is causing them to really adjust the policy most probably in September. So what is Powell thinking about economy? They will do everything they can to support labor market. That's going to happen. Markets can be confident, and we can all be confident that they will do everything they can, and they have a lot of tools to really provide price stability. With an appropriate dialing back of policy, so cutting interest rates, they think that the economy will go back to the 2% while maintaining the strong labor market. That's the Goldilocks scenario in which they beat the inflation and they save the market. That's the scenario in which soft landing is happening. The current level of our policy rate gives us ample room to respond, so they are not in a critical situation, including the risk of unwelcome further weakening in the labor market conditions. So this is not longer a concern of if they are going to cut rates or not. They are going to cut rates, but how much? 25 basis points or 50 basis points? Because it will depend. It will matter more the amount, the speed at which they cut rates than the fact that they are cutting. 25 basis points each time will be like 75 basis points at the end of the year. And that will be a soft cut rates to the long term. Cutting 50 is going to cause a little bit of turmoil because they will do like they're stepping down. They will cut 50, they will see, they will even hold rates and then cut another 50. And that is going to cause a lot of, I think that's going to be a warning sign of we are cutting too much because we need a lot of support. And that will more probably freak out the markets. So where are we in terms of inflation? In terms of interest rates expectations. So we expect this 25. We expect another 25. And we expect in December, we are still mixed sentiment in between 25 or 50 basis points. But what is true is that it's in between 75 or 100 points of interest rates. Current rate, it's 525, 550. So we are going to 525 in smaller steps. That's better. That's a good path, slow path. So what this will cause is basically that the Nasdaq will suffer. Large caps will suffer a lot because of these interest rates and the overseas businesses that they have, the strong dollar, things like that. Higher interest rates are not good for big mega cap stocks. They are good for small caps and small businesses that need loans to maintain their businesses. That then with lower interest rates, they will be able to really maintain and go out of the water with their businesses. So what we are going to see, and we are right now seeing, is that, for example, Nasdaq and ES are up 1% on good news that interest rates are going to be lower, and the economy is strong. I think they are more focused on labor market strength to support their business than on interest rates. But anyway, we can see that small caps are 3% today. 3%. So when we freaked out in the world, they were punished. But when we are trying to relax and adjust policy rates to a better environment for loans and for economy flow to support the economy, they will reap higher. So how was the week on the Nasdaq? I wanted to start this by explaining what interest rate means for everyone, and not only for everyone, for households, but also for the market. Different parts of the markets are going to react differently in terms of interest rates. In this case, NQ this week was like, well, a little bit boring. We got Monday continuation, Tuesday, Wednesday, a little bit of upside with the NFP adjustment. Wednesday was the big down day on the PMI, manufacturing and employment issues. And then finally on Jackson Hole, we kind of it looks that we are not super comfortable here because we are inside candle the red Thursday. But let me show you the week in terms of indicators. In terms of internals, we have here the volume Monday increasing, Tuesday decreasing, Wednesday increasing, Thursday decreasing, and Friday big push. This is one of the reasons why we had such a choppy, volatile week. This is in the ES, in the NYSE. So turnarounds in volume, but just keep in mind this huge surge in volume in the ES. At the same time, the advanced decliners, the stocks were going higher relatively, lower on Tuesday, higher on Thursday, on Wednesday, lower on Friday, and big time higher on Friday. Again, another sign of volume entering the market with advanced stocks. In terms of Nasdaq, the internals are showing you the same. This chop, this range, these sideways internals until Friday. Big spike in volume. And on Friday, big spike in advancers. So not only we have to see what happened in terms of candles, but in terms of internals, advanced decliners, and volume, we are pretty bullish, I would say. I'm going to check real quick. Excuse me, I should have prepared this. Let me see the open interest. Look at this. 35,000 of open interest in the ES. Huge. And in the Nasdaq, 3,000, which is also quite big. So what we are seeing here is that despite the fact that we consolidated in here in this range, last day added a lot of inflows. So that is going to change my approach to the technical analysis that I'm going to perform. Because the first thing that I would like to show you is two things. Let's go to the 4 hour, to the 1 hour. As you can see, we have two sets of volume. This one, purple, which is the volume profile since the lows that we established in early August. This volume is just, the point of control is just here at 19,855. We rejected that. And we have another volume profile from the all-time highs, which is yellow, whose point of control is right here at 821. So in this range is going to be key. There's a huge fight here. In this range, volume shows us that investors, participants, everyone is fighting in this level from the lows and from the highs. So this is going to be the key range for me to really establish my bias for the week. Despite this week, I'm going to use this week to really see if we are going on Monday to the upside or if we continue rejecting that. So quite simple. I'm going to remove everything from last week. I had the fib retracement from highs to lows on Thursday, and we rejected the golden pocket. So I'm going to keep that. I'm going to remove. Well, let me show you first my trades. Now let's focus on the technical analysis. Okay, let's let's do this. So basically, sorry about that. Let's remove everything because I want to show you my levels beforehand, and then you can do your own analysis, your own stuff. We got this liquidity. We got this liquidity. So in terms of liquidity, I'm not going to add anything in this range, just what we had, which is this daily on the downside, which we never took it. We are with a higher low and with a lower high. So we are waiting a decision here. That's why I want to take this opportunity to just see how are acting in this level. So the first thing I'm going to do is finally, I think I'm going to remove that. I would like to take the quadrants on this week, on the 1 hour week that we got on the rejection. So basically that is going to provide a little bit of context. That it's that. So we need to be above this zone to be safe, and that's almost the same zone as this. So the first sign, the first zone of resistance is going to be this zone in which point of controls are converging. So we have this level. This is going to be my main level for the week. I want this market to continue basing structure, and if we start pushing this and we go above the point of control from all-time high, we start pushing the 50% of this rejection week, and we continue towards the upside, perhaps having a bounce on the volume from the bottom, the point of control, that would be my number one setup for I'm going to be bullish. This is the first setup, the first thing I would like to see. This would be perfect to really attack and open 20,000 again. The second setup would be a rejection of this. So a rejection is basically either a push and a failed, and then we can clearly see that we are rejecting two zones of interest. That will be my number two setup, in which I would like to take some shorts for these relative equal lows. So be aware of this and be aware of, be aware of this, because that would be quite key. Even though I don't follow trend lines, there's a lot of people that trade based on that. And I want to know what they are doing, if they are following that. Because the first sign of rejection could be this, and the second sign of rejection could be this. So this could be the second setup, and that would be more bearish. And I think this is less probable than the number one, because of the internals that I showed you earlier, and also because of the open interest that is huge. On the ES is 35,000, and we are 1.24% away of all-time highs, which is this big bold orange line, 57.21. So ES looks like it's prepared to push all-time highs because the Russell had a strong day on Friday, and the forecast for the Russell is to continue pushing. So we have this zone, this level since 2021, which we tried a couple of times and we failed. We had the Black Monday and now we are pushing again. Small caps are pushing the RSP to new highs, all new all-time highs in the RSP. And look at the internals. Look at the internals. Look at this momentum. We are at 76% of stocks are above the 20-day moving average. 67 are above the 50. And in terms of long term, we have 61% of stocks above the 200 moving average. So the strength in the overall breadth, it's there. I'm going to adjust this to the new all-time highs because I want to see the same we did here. So basically I can remove this Fibonacci. I'm going to keep this level straight. This is a gap that we left and we need to really, I'm going to copy this and I'm going to put a level of stability in this range. We really need to see this confluence. I don't want this market to go back and continue lower. I want this market to, if we pull back, bounce from the previous all-time highs. I really doubt we are going to go that low. I think that the next setup is going to be around here in a zone. So basically, I really think this is going to hold. That would be my first level. So what is true is that the RSP, it's the equal weighted ETF is strong, small caps are strong. That is pushing the ES to be so near all-time highs. But the Nasdaq is still struggling. Nasdaq, Apple, it's just resting on a support level. Microsoft got a huge rejection of the 45 and is now supporting with the 20. It's in between this range, which is nowhere land. Tesla with a 4.60% on Friday, it's still in the range, which you can see right in the middle. Amazon, consumer discretionary, it's in the lower part of my established range, following a really bad day on Thursday. Google, the same, just trying to find some foot on the 20 and support. Nvidia, it's stronger than anyone else, but we are still seeing the point of control here, and we are below the point of control. We are trying to find structure here to attack. Who knows? From Nvidia, earnings, it's near. I think it's next week. Meta, it took all-time highs and rejected. So Meta is finding a lot of buyers down here. So the Nasdaq it's stronger than I initially thought, and we are where we are. I already told you that I'm finding volume quite interesting at these levels, and it's the best way of finding levels for next week, finding the zone, which is going to be key for the entire week, is just finding the volume profiles and trying to establish some range there. Below that, I don't want to analyze anything. I'm aware that we have some relative equal lows down here that we might catch. So it would be super nasty to do this. But we did that in the past. Look at these days. Look at these days. So what I think it's bullish is the setup number one from before, and I'm going to use this zone in between. Basically, this zone it's 50 points. It's between 860 or 810s and 850. we start seeing the Nasdaq grinding higher, I think volume would be increasing. Open interest is backing up a bullish case. So we have also dollar super weak. This is helping the case for bulls. Dollar is weakening because interest rates basically are destroying the economy. So the dollar, the currency, is going lower. Yields, now that is confirmed by Powell, the interest rates are going to be lower. Obviously, yields are going to be super lower. The 10-year yield is going to be better because it's long term. The 2-year is controlled by the Fed. Then, if we check the inverted yield curve, we had a push because the 10-year pushed to the upside while the shorter term got wrecked with the news of lower interest rates. So we are going to see that an inversion again and hopefully stay up here and start building the case for no recession despite the fact that the inverted yield curve is uninverted. I will be explaining that once it happens. You'll know how it works, basically like this. But when that happens, I'm going to go deeper in the explanation. But for right now, financials are strong. So the economy is strong. NQ is the thing that is struggling because we are going to see lower interest rates. So that's what happens when we see that. And small caps and the RSP are super strong. So if you're a big investor, you are already rotating out from mega cap or from tech companies to small caps or lower caps that benefit the most with this lower interest rates environment that we are going to see starting September. So we have to be a little bit more cautious with the NQ. The ES is going to be propelled by small caps. As you can see, this V reversal almost completed on Friday, but the NQ is still at the mid of the range. We are exactly at mid range. So NQ is weaker than ES. I recommend if you're going to go long, pick the ES. NQ is going to provide more opportunity, but it's going to be choppier and more difficult to trade. We all know the NQ. So for this week, remember the two setups that I explained earlier. This is my chart, as simple as that. I'm going to keep it like this and see price action. Remember the open interest that we got on the ES and on the NQ. Remember the internals, quite heavy to the upside on Friday. So unless something bad happens on the weekend, I expect Monday to start pushing. But as always, price action is king. We are going to continue seeing these markets day by day, but my bias is a little bit more bullish than bearish due to these internals and the open interest. So that's all from my side, folks. As always, thank you for your time. If you found this weekly recap useful, please give it a like, subscribe to the channel. I put a lot of efforts in these weekly summaries for you to, also for me, but I'm publishing this for you to really see how I understand the markets. I summarize key things for you. I provide key levels, structures that you need to pay attention if you want to be able to trade these markets and take those opportunities. So if you like these videos, thank you for the support. I do these videos, the weekly recaps, every Saturday. And I also, from Monday through Friday, I do daily market updates for market forecasts, market updates, and market recaps. I appreciate your time. As always, remember that discipline and risk management are key for your success. Have a nice weekend and see you on Monday.